Hello traders, welcome to the live trade. As you can see, I've got a couple of trades open right now. I'm gonna go over them in a minute. Yeah, so I've got a couple of trades open here based on my day trading strategy, and whoever is joining me on this live stream, if you are a trader, like, just take this trade. The pound New Zealand dollar is a sell, currently is a sell. Now obviously don't do what I'm doing right now with what I said on my chart all in, but this is a chart, this is a trade where you can take a considerable amount of risk on it, because the worst thing that this market can do here is we're gonna get a consolidation here. That's the worst thing the market can do. So there is virtually no risk attached to this trade, and I see this market eventually coming all the way back down, or at least giving us a considerable retracement. That's what the market is going to do. So as you can see, pound New Zealand is a short and pound Aussie is a long. I'm currently long on a pound Aussie, and this is based on the runner strategy that I trade. And yeah, so this is a standard trade that you guys probably must have seen me trade a lot. I mean, since I've been doing this live stream, I think this is going to be a straightforward winning trade, and I expect that to be on the pound New Zealand as well. But yeah, so expect to get a short in position. I'm already short. I went in short at around 2023. It's around 2027 now, 2072. So I do expect a retracement at some point, either a retracement or a complete turnaround for the market to go in the opposite direction. Yeah, so for those of you who are joining me now, pound New Zealand dollar is a very, very good shorting opportunity. Yeah, I'm already short on it. Even though the market has gone up by about 30 pips, I do expect the market. Morning, Wale. I hope you've taken the pound Aussie dollar, the runner trade on the pound Aussie, because this is a strategy that we've covered. So I hope you've taken that trade. We haven't covered this strategy yet, so but you can still take this trade. Pound New Zealand dollar is a short, pound Aussie is a long. If you guys have any questions, do put it in the live chat. And so like I said, I've got a couple of trades open right now, and obviously one of them is in the pound New Zealand dollar. Is a short, is the one that I've got a lot of risk on it. But don't do what I did here. Don't go all in. If you don't understand the strategy, if you don't know how to trade it, don't go all in. But this is a trade I'm taking a considerable amount of risk on it, because like I said, the worst thing that the market can do is just consolidate around here. But I expect a very, very deep retracement, possibly a complete reversal. So we'll see how that trade is going to pan out. And also on the pound Aussie dollar, I'm long on it based on the runner strategy. That is a day trading strategy that I use to trade. So yeah, this is going to be an interesting day, because I haven't really had any trades to take lately. But yeah, this is going to be definitely going to be an interesting one. You're welcome, Facebook. You're welcome. And thank you so much for tuning in yourself. I've seen you on here a few times now, so if anyone is just joining, thank you guys for joining the live stream. As you can see, I've got a couple of trades open. One of them is on the pound New Zealand dollar. That's the one I've got a lot of risk on it, because this is one of those trades where, like I said earlier, the worst thing that the market can do is just kind of consolidate here at the top. But eventually when we get to New York session, we are going to see a deep retracement or a complete reversal on this trade. So yeah, I've already got my position open on that one, and I've also got a long position on the pound Aussie, and this is based on a runner strategy that I trade in my day trading. So we just wait and see how these trades are gonna go. Obviously I'm gonna stream today for an hour, because I don't think this market is gonna go just now. I mean, it could. So what I'll do is I'll probably come back and stream also during New York session, because that's when I expect the market to actually give me that reversal or deep pullback. So I do see a little bit of consolidation here, and then we can head down during after New York session. I'll be very surprised if the market head down now, but it can, it can do it, because the pattern has already been completed. The pattern has already been completed. So So if you guys have any questions, you can put it on the live chat and I'll answer your questions. Hi, cool, cool kid Keto. How are you doing? Thank you for tuning into my live stream. If you do have any questions, guys, you can put it in the live chat. And obviously, as you can see, I've got a couple of trades open right now. So yeah, they're all based on my day trading strategy, guys. For those of you guys who are interested in learning the day trading strategy, you can find the link to my website in the description down below. Yeah. Are you a new trader, or are you an experienced trader? Cool kid Keto. How long have you been trading for? Forex, inexperienced, so you're quite new then. Have you started learning already, or? Been trading options, stocks, futures, and watches for a long time. Oh, okay. So you're not really new to trading, um, but obviously options, stocks, and futures. I mean, I've never really traded options or futures, but I do know about stocks. I mean, stocks is more for like, I wouldn't say long-term investments, but they tend to I mean, let's be clear. I mean, forex trading is if the forex market is the most volatile market out of all the options you just listed right there. So if you're looking for volatility, if you're looking to be in and out of the market, if you're looking to make money on a obviously if you want to be a day trader, I mean, I think forex trading is definitely the most volatile market out there. Why does it? It shouldn't scare you. It shouldn't scare you. You just need to understand a concept. You know, there's a concept that you can understand and you can trade forex. I mean, there's a lot of things out there. There's a lot of rubbish out there, really. That if you try to learn, you don't need to know. You don't need to learn a strategy to trade forex. I think I did explain in one of my live streams. I can't remember which one was it. I did explain the concept behind my day trading method that I used for trading. So tons of macro driving prices. Yeah, but at the end of the day, I mean, that's why you need a lot of patience. Once you understand what you need to look for, once you understand how the market works, I mean, you just need a lot of patience, because it only takes one moment for you to just hit it. Just like, I mean, you're here in my stream at the right time, because this is one of those trades where I can guarantee you it's gonna be a winning trade. You're probably gonna be wondering how, but I can guarantee you this is gonna be a winning trade. Because like I said, the worst thing the market is gonna do is consolidate at the top here. And obviously once we get to the New York session, then we're gonna get that deep pullback or a complete reversal. That's what's gonna happen. So once you understand those terms, once you understand that this market, they do have a ceiling, and this one is right at the top of the ceiling. Well, obviously, I would have to break a lot down for you to understand why I'm taking this trade. But yeah, once you understand trade, like I said, there's no strategy involved. You come here, you're never gonna see me using any indicators, any lines on my chart, no, I don't use none of that. Yeah, crazy, I know, but it's just a simple concept that once you understand it, just makes your life so much easier. But like I said, the most important thing obviously is patience, because if you understand what I do here, but it's the patience that's the most important thing. And yeah, I mean, since I mean, maybe I'll try and give you guys a little bit of a uh, knowledge in terms of, you know, what I do, you know, how I trade, or so let me open up your mind a little bit, Keto. Yeah, if you, of course, if you wanna learn more, then you're gonna have to. I mean, this is gonna take. I cannot teach this over a over a live session on YouTube, but maybe I can give you a little bit of a background so you can understand how it works. Obviously, looking at my chart here, you can see that I've got a lot of these things. They're not indicators, by the way. They're just like sessions. They call sessions. It just marks out the US and the UK session and the Asian session. The Asian session obviously is the one in white, and I don't trade the Asian sessions. But this is the most important thing to me is what happens between this US and the UK session. And currently, I've got my chart on the pound Japanese yen. Now, if I put this on the 4-hour chart, what you're gonna see is boxes. You're gonna see boxes everywhere, right? All boxes with numbers. This dates back to over 2 years worth of research. So when I tell you that something is gonna happen, a trade is gonna happen, then you have to kind of, you know, it's all about understanding what goes on in these boxes. Now, if you look at these boxes, what you're gonna notice is every single box covers 5 sessions across the week. So that's from Monday to Friday. So the whole week this box covers. Now, obviously in trading, especially in forex, pay attention, because this might be very, very helpful to you if you ever decide to that you wanna trade forex. This is gonna be the best introduction that you're gonna get, and it's gonna be the best introduction you're gonna get. And if you ever decide to learn, stay on this path, because if you try to deviate, try to go on to learning what is out there on the internet, like all these strategies out there on the internet, you're never going to be a successful trader. Let me just tell you, plain and simple, you're never going to be a successful trader if you try to go and learn things like thank you for solving. You're not going to learn trading if you try to learn things like double bottom, double tops, you know, what's it called, resistance, support, and all of that nonsense. Like, you're never gonna be a trader, because that's gonna put you in a really, really tough position as a trader. Because I'm gonna explain why that is in a minute. But first, just stay with me. When you look at my chart here, you're gonna see a lot of boxes, and I'm just gonna give you a background. I mean, if you want to know more, then you're gonna have to be one of my students, and I'll teach you. But I'll give you a background. So every single box that you see here covers a whole week in trading. Now, if I go back a little further, what you're gonna see is, you see numbers in there, right? I hope you're familiar with pips, because what I'm about to say it has something to do with pips. So if you look at these numbers, just means the whole weekly pip range. But what you're gonna notice is, like I said, this dates back to years and years of research. You're gonna have to analyze every single currency pair to understand this. But based on the pound New Zealand dollar, the weekly pip range of the pound New Zealand dollar. So let's say we're talking about under normal market conditions, when you have all the macro, minor economic. We're not talking about major economic news, like major financial news, like things like COVID, or things like tax cuts, election, Brexit, and all of that, things that tend to move the markets. So just ignore that for a second. Besides, those kind of events only happen once in a while. So under normal market conditions, the weekly pip range of the pound to the Japanese yen is between 500 and 600 pounds. That's a maximum weekly pip range is between 5 to 600 pips. Yeah. So now, giving you that information, like I said, is very, very important. Keep that information in your head, because the next thing I'm going to tell you is, I'm going to give you a little story, a little example, that I want you to also keep that example in your head. Yeah. So just imagine you have a plant. So let's say I give you a plant in a pot, and I tell you that if every single time you water this plant, the plant is going to grow. Yeah. And any day that you don't water that plant, the plant is going to shrink. Like this is just hypothetically. It's not obviously, we know plants don't shrink in growth. They don't do whatever. But just hypothetically, I give you, you know, a plant in a pot, and then I give you 5 glasses of water. And I tell you that if you use a glass per day, obviously from Monday to Friday, that is, we're not talking about the weekends, because the forex market only opens, you know, from, well, Sunday night, but nothing really happens Sunday night, but you know, that's if you live in the UK. But you know, I go from Monday to Friday, and I give you 5 glasses of water, and I tell you that, you know, you can use this glass of water to water this plant. And obviously every single time if you use a glass of water, the plant is gonna grow. And if you don't water the plant, it's gonna shrink. But I've given you 5 glasses of water, and I didn't say you can use, you know, a glass per day. You know, you can choose to use it however you want to use it. So let's say, for example, you decide to use 4 glasses of water on Monday to water that plant. What's gonna happen? That plant is gonna go really, really high, isn't it? It's gonna grow really high. But then obviously you've used 4 glasses of water. You've only got 1 glass left, and you've got 4 days of the week left. So if you use that imagination, like, you know, I don't even have to tell you what do you think is going to happen on the remaining 4 days. Straight away your mind is going to click and tell you, well, if I've used all 4 glasses of water, I've only got one glass left. So that market is going to shrink, because the remaining 4 days of the week you can only use 1 glass of water. So whatever you do, that plant is going to shrink. So think about it to think about that. Use the analogy in your head, and think about you know, pips. Because earlier I told you that the weekly pip range for the pound to Japanese yen is around 500 to 600 pips. That's a maximum weekly pip range, is between 5 to 6. That's if the market is volatile on that particular day. Of course, there's some weeks that the market is never going to be volatile. But if the market is really, really volatile, it's around 500 to 600 pips. So what's going to happen if, for example, when the market reopens on Sunday night at 10 p.m. and you looked at the market on Monday, and the pip range for Monday was around 350 or 400 pips. Which direction do you think the market is going to go? In the opposite direction, right? Because you have to always think about the glasses of water. You have to always think about that. So that's one way of you can accurately predict what that. And I'm going to show you a couple of examples on the chart, and you're going to see. But that's one way you can predict the market. That's one of the strategies I use. I call that strategy rise and crash, but that only happens once every couple months. That involves patience. Of course, there's 6 other strategies that I use that tells you everything that happens within that box. But that's just one strategy. So I'm going to put my chart on the 30-minute time frame, and I'm going to show you that example. So every single thing I do, every strategy I teach, every day trading strategy that I used is based around understanding this analogy. Like I say, there's years and years and years of research here. And first up is going to be here. So because this box explained perfectly what I just told you. So we got a whole box here that covers the whole week in forex. Yeah. On Monday, the market resets Sunday night 10 p.m. Heading into Monday around 10 o'clock during UK session. The market moved 400 pips. So I think about this and relate this to the glasses of water and the plant growing that I just explained to you, that example. Because if the weekly pip range, the maximum weekly pip range of the pound to the Japanese yen is between 500 to 600 pips. And then Monday, first day of the week, the market has moved 400 pips. What do you think is going to happen? It's not rocket science, is it? You see, there's no strategy here. There's no what's it called? I mean, of course it's a strategy, but there's no indicator here. There's no tool here. There's no RSI. There's no MACDs. There's no nothing here. This is simple logic, and I can show you this time and time and again happening on the chart. The market will shrink. If you understand this, this is similar to the trade that I've actually got on today, but it's a different type of strategy. That's why when I told you on that trade, I'm going all in, because I'm going all in. The only thing the market can do, the worst thing that the market can do, the market will just consolidate at the top there. But if you understand this analogy, you know, and then I could go in and break down every single thing that happens within a box, and you know, and you're gonna see how it is. But you know, forex trading exactly. I like how you just answered there. No water left. No water left. So the market is just gonna, the plant is gonna shrink. It's not gonna grow. So everything, single thing that I trade, every strategy, all my day trading strategy revolves around understanding what goes on in a whole week. Revolves around the glass of water. Revolves around everything. So that's today. If you look at the trade that I'm in today, where is it? Pound New Zealand dollar. This is another trade with no water left. There is no water left on this trade. So the worst thing that the market will do is just gonna consolidate. But I think when we get to US session, we are gonna get that deep retracement. Because look at what happened. This is about okay, where am I measuring the pip range? This is all in one day. This is about 400 and I mean, if this was on a Monday, if I had a house, I'll sell it and put my house on it. If this was on a Monday, but because it's on a Wednesday, so that's why you gotta be a little bit cautious, because it's on a Wednesday, because we're already halfway through the week. Because the glasses of water also depends on that. The using of water also depend on that. When it happens on a Monday, yeah, but this is happening in the middle of the week, so you still got 2 days of the week left. I mean, even though like this market has nowhere to go really, but yeah. So this is that's the analogy that I use when it comes to like my day trading, and like I said, you're never gonna see anybody trade like this. You can research on the internet, find trading strategies, but you're never gonna see any trading strategy that is based around what I do. There is just none. So it's just that it requires patience. It requires patience. It requires a lot of patience. So yeah, exactly. Exactly. If like, that's what I'm saying. If this were to be a move, of course, every single currency it's different. Like, you have to do your own research to understand the pip range. But that's just like what I just told you. Only happens once in a while. It only happens once in a while. But when it happens on a Monday, if the pound yen moved 600 pips on a Monday, like, boy, like you virtually have no risk, because the market is just going to go completely opposite direction. You have absolutely no risk on that trade. But it's all about understanding that. And then obviously, like, there's a lot that goes in. That's what I'm saying. A lot of new traders, when they come into trading, I really hope that you don't go about trying to learn trading on the internet, because that's just gonna set you on a path where you, like, it's not gonna, like, it's a painful path if you try to learn trading on your own by reading things on the internet and things like that, because there's a lot of information that will just be that are really bad for you, absolutely bad for you. And it's one of these things that people usually say, apparently, when you're trading every single trade, you should risk what, 2% or something like that. Like, that is absolute, like, you know, for example, this what I just explained to you, the trade that I explained to you. If that happens on a Monday, I'm not risking. Why would you risk 2% on your account when a trade is as close to as guarantee to a winning trade as you're ever gonna get. So is this one, by the way. Like I said, the worst thing that can happen, the market will just consolidate here for the rest of the day, and I'll be out of the market for break even. But I'm not losing this trade. Or I might take a, if the market doesn't move, I might take the loss that I'm suffering on the spreads. That's gonna be my loss. I just took the trade. Thanks, looks good. Yeah, of course it looks good. The worst, like I said, the worst thing the market is gonna do is you just get a consolidation here at the top. That's the worst thing that can happen. So you take that trade, you have you can go about, your normal job or whatever you're doing, because once you understand, that's what, if this would have been, if this was on a Monday, I would have been even like the confidence. I mean, I still have. I mean, this has about over 90% chance of giving you a profit. But that concept that I explained, that one happens on a Monday, you have over 99% chance. But the thing about that one, it only happens once in a while. But obviously there's other things as well that goes on within that box that once you understand it, and that's what I do. That's how I trade. A lot of times that I come here streaming, when I'm streaming, I always use one of the strategies from my day trading, and most of the time is the runner strategy that people usually see me trade, because that's the strategy that I go in and out of the market within a few hours. So usually during the UK session, I'm in a trade in the UK session and out before the New York session. And but yeah, this one is a little bit different. That's why I said with this trade, I think I'm definitely gonna stream during New York session as well, because I'm not gonna, I mean, this trade looks like it's gonna consolidate, and I'll come back and stream during New York session, and you can see, guys. But just mark my words, this is what the market is gonna do. Come New York session, this pullback, this deep retrace, either complete, reversal, or the market is gonna give you also deep pullback. That is gonna happen. Yes, and if you have any more questions, guys, do put it in the live chat. Let's talk about trading. It seems like there's a lot of new traders joining here. I can give you a lot of advice, but like I said, the first one is, if you're gonna learn trading, don't ever read something off the internet or learn something from videos on YouTube or whatever you see. Just don't do that. Because a lot of the information that's out there is just way too complicated, and it's just and they're not really gonna help you. So I can explain trading to a beginner in about half an hour, and you can understand the whole concept behind trading. So GBP, and it looks like it might go down. What do I reckon? I mean, that's not the I don't think it's on my radar for this week, simply because market is a bit choppy. No, I can't give you an analysis on what the pound yen is gonna do. Can go either way. So far, the weekly peak range is around 155. So, I mean, if I had to guess what the market is gonna do by New York session, I can tell you. By New York session, is if the market is anywhere here by New York session, then I think it's gonna go up. Hey, what should I do? I had already started learning through videos. Yeah, but you know, that's the problem of that's the thing that you have to be like. The thing is that every single video that you're gonna come across, every single thing that you're gonna come across on the internet, all those information. I mean, do you even know the statistics for traders that actually make money in trading? It's less than 10%. So 90% of retail traders don't make money. And 90% of retail traders, all the information that you find on the internet, all the information that you watch through videos, that's the information that's available to every single retail trader. And the reason is because, so every single strategy that you're gonna see out there, whatever you're gonna find, I'm talking to you, Milton, whatever strategy you're gonna find out there to trade, that strategy is only gonna work about 60% of the time. In terms of the winning ratio of that strategy, it's about 60% of the time. And I'm gonna explain to you why it's gonna be so hard, almost impossible. And I'm gonna tell you your chances of being successful if you learn from what you're doing. And I'm gonna draw a map for you. And believe me, this is what's gonna happen. Just believe me, yeah. So the chances of you succeeding in trading or being profitable in trading, if you learn from videos, or if you look, obviously what they teach you in videos, the all strategies are out there. I know every single one of them because I've been through that process. So if you learn from the internet, from videos, those strategies have a winning percentage of about 60%. Now, obviously, once you start trading, once you start using those strategies to trade, you might be successful. You might win a few trades. You might feel confident. But eventually, the losses are gonna come, and that's what's gonna end up causing you to blow your account. Now, the only way you can be successful by learning trading from watching videos on YouTube or reading things on the internet, it's almost like you have to trade like a machine. And the reason is because the most important thing when it comes to trading is the psychological mindset, the emotional side of trading. That's one thing that nobody can teach you, and that's one thing that you're gonna have to take time to develop. And if you have a strategy that only wins about 60% of the time, then it makes it even more difficult to master the emotional side of trading. Yeah, because, and if you're gonna go down that path to be able to go through the whole process of learning, trying, failing, trying again, failing, trying again, just to kind of get to the point where you can master your psychological, the emotional side of trading, that's going to take you a minimum of 5 years. Like, believe me, it's going to take you a minimum of 5 years. So you only have to ask yourself, is it worth it? And it's going to be a very, very painful journey. It's going to be a very painful. I mean, luckily for you nowadays, there's prop firms around, so you don't have to waste too much money on trading. But that's the truth right now. If you're learning things from the internet, from videos, that's what's gonna await you in the future. That's what your path is gonna be. So, and that's the harsh truth. But if you're someone who, I mean, the only way you can be successful in trading, you have to find a strategy that wins you 90% of the time, where every single time you take a trade, I mean, those kind of strategies are very, very rare to find, and obviously they take, you have to have a lot of patience for them. You have to have a lot of patience. Like what I just explained to you right now, I just explained to you the whole concept behind the strategy that I trade, and you can see the way it makes a lot of sense to most of you guys, Why does it make a lot of sense? Because it's just, and it's very simple to follow. There's clear rules. Every single one of the strategies that I trade, my day trading strategy, has absolutely clear rules. Now, everything that you see in the video, everything that you watch in the video, I'm gonna get to that, but everything you see in the video, everything you watch in the video, every single thing, there's a lot of subjectivity to what they do, especially with the double bottom or double top, or using indicators to trade. There's a lot. I mean, to be honest with you, using indicator to trade is probably the worst thing you can ever do, because indicators are gonna completely mess up your emotional state, because indicators only give you a signal once the market has already moved. So you're not gonna get the starting part of the move. You're gonna miss it completely. So best way to learn. I mean, listen, I don't want to sound like I want to get you to buy my course. I mean, even if you do, is the cheapest course that you can ever spend money on. But I can't. The best way to learn, like I said, if you want to go through the whole process of learning, teaching yourself how to trade, or learning from watching videos and stuff like that, you can still learn that way, but it's just gonna take you longer, and it's gonna cost you a lot of money. You know, that's what I'm trying to say. If you want someone to teach you, but you have to find someone that knows what they're doing, someone that can, I mean, and not just, because a lot of the courses that you're gonna find out there on the internet, the courses that they teach you exactly the same thing that you're watching in the video, just in a different way. So you just have to do your own research and see what's best for you. Like I said, I've been streaming here on my live trades on YouTube for the past 6 weeks now. Probably it's coming up to 2 months now. Yeah, it's gonna be 2 months at the end of this month, and every single day you see me come here trading, following a particular, I mean, I don't explain all my strategies to people. I don't do that, because that's not going to be fair to the people that are taking my courses, to my students. Like I said, Wale, he's one of the people that watches my live stream for the first couple of weeks, and he ended up getting my course, and we're nearly done now. I mean, because it only takes about 6 hours, 6 sessions, and it's one-to-one, face-to-face, over Zoom. That's how I teach. And he's gone through the you know, I think we've probably covered, we're on our 5th lesson now. We're going to be on our 5th lesson soon, and he's in the group, he can tell you. Which is the best way to learn? Okay, I already answered that. Most get liquidated, enter after these. This is why I just entered GBP, but I should waited. They have just liquidated anyone short in the GBP. Learn markets. Okay, that's a good shout, definitely. I mean, I've stressed that a lot as well, Brandon. Thank you for that. I've stressed that a lot as well. Understanding market structure is definitely the foundation, the best foundation you need. But if you're, I mean, it depends on what you're looking to get out of trading. Milton, are you looking to do this as a full-time trader, or are you just looking to make some extra income on the side? Because if you're someone who has a full-time job and you're just looking to make extra income on the side, then you don't really need to go into the whole process of understanding structure. You have to, yes, while you see he's on the live chat, he's telling you, you don't have to go through the whole process. So if you're going, yeah, then boy, you have to really understand structure. Then you have to really learn structure. Yeah, you have to really learn structure. Listen, I've got a couple of I'm gonna put a couple of video links in the live chat for you to watch, because those are some of the trades that I've actually taken on this on my live stream, but I've kind of made it just into a video. It's about 15 minute long. You're gonna see how the whole process of how you can combine structure and be able to trade. But yeah, there's just let me find the video and give it to you. But definitely structure is it cannot be underestimated, because you know, structure is the foundation and is the language of the forex market, if I'm being honest with you. So as a new trader, definitely understand structure first, especially if you're looking to do it full time. Then you have to be able to understand structure. I'm gonna put a link to one of the videos in the so that's for you, Milton. If you want to understand, or you want to know how analysis is, I mean, obviously, like I said, when it comes to structure, there is what's it called? Obviously, there's 3 different types of market structure: bullish, bearish, and consolidation. And you have to be able to understand each and every one individually to understand, because that is the foundation, that is the mechanics, that is how, you know, the general process for understanding how the market works. And you have to be, because a lot of times, even when it comes to structure, a lot of times on the internet they don't really explain, you know, structure very, very well. So one thing that you should always pay attention to is rules. Always pay attention to rules, because especially when you understand structure, the structure comes with understanding the rules of the forex market, and the market just follows rules. The forex market follows its, you know, there's a certain rule that the market sticks by, and that's the rule that the market follows. Now, and it's your duty, it's your job to understand those rules, because a lot of times you're going to see things that, because you can look at a chart that does not look anywhere like it can look so messy, but once you understand what the market is doing, once you understand structure, you understand the rules, you're going to be able to break down any single chart that you see. You're going to be able to break it down. Just like an example, when we talk about what a bullish structure is, because bullish structure is the foundation for a bullish market. But a lot of times when you ask people what is a bullish structure, people don't even understand. They can't even tell you what a bullish structure is. Yeah. So let me give you a little bit of a piece of information that might help you. You know, that must start, you know, help you on your, you know, if you ever decide to start learning structure. But this information is going to help you. So I've drawn a structure here on my chart. This is what a bullish structure look like. But if I tell you to go through the charts, or go through any bullish market and try to find a structure that look like this, you're probably gonna struggle to find a lot. Why? Because what I just drawn here looks very, very symmetrical. It looks perfect, right? You got a nice impulse leg, a nice retracement, and another impulse leg forming a new structure high. But the market doesn't care about perfection. It doesn't care about something that looks good. The market cares about rules. So that's when we talk about bullish structure, when we talk about starting point. So we got a starting point of a bullish structure. Let's change that to a different color. No background. Starting point, I'm just going to abbreviate that as SP. You got initial structure high. Because once you get an impulse leg, you got the starting point, and at some point that impulse leg is gonna stop and retrace, and that's where you get that's where your initial structure high, and then you get outside return, or retracement, or pullback, however you want to call it. Either way, you're not wrong. And then you got a new structure high. Now this is just the labeling of the parts of a bullish structure, but still this doesn't give you enough information to go and understand what structure is. But I mentioned earlier that the market cares about rules. It's all about rules to the market. And when you're dealing with a bullish structure, the bullish structure has 3 different rules that if the market fulfills that rule, then you can guarantee that it's going to move on from that structure. Or if it breaks that rule, you can guarantee that it's going to change into a different structure. And those rules, 2 of them have to do with the outside return, and 1 of them has to do with the new structure high. So let's talk about the outside return of a bullish structure. So the outside return of a bullish structure has 2 different rules that it needs to stick by for you to be able to understand, to say that it's a valid outside return of a bullish structure. So this outside return, first of all, it must not go beyond the starting point. So it cannot come and touch the starting point. If it touches the starting point, then you have a double bottom. So that's the first rule. the outside return of a bullish structure cannot go below the starting point. And the second rule involves the use of a Fibonacci. So if you're new to trading, you probably wouldn't be able to know what a Fibonacci tool is. But in short term, I mean this is good. I mean this is something that will take a while to explain. But in short term, Fibonacci tool is just a tool that has different retracement lines, and usually it tells you exactly where the market. I mean, it doesn't really tell you exactly where the market is going to retrace, but at some point the market is going to find one of these Fibonacci lines, and it will stop at that retracement and then form a new structure high. But when you're talking about the outside return of a bullish structure, the outside return of the bullish structure needs to come in and touch at least the 382 Fibonacci retracement, which is the first one right there. So now you've got two rules, and the first rule is it cannot go beyond the starting point, and it must touch the 382 Fibonacci retracement. So basically what we're saying is this market needs to stay above the above the starting point and all the way to the 382 Fibonacci retracement. So anywhere within this zone to the market, that's the rule that it just needs to abide by. Now nobody can tell you exactly where this is gonna stop, where this retracement is gonna go. You can only guess. And that's why, like I said, when it comes to trading every other strategy that you find out there, because a lot of this strategy all come about from understanding the bullish structure, the structure of the forex market, and a lot of those strategies are subjective. So that's why the market just gives you a rule, and the rule is between the 382 Fibonacci return and the outside return. At some point the market is going to stop and return. So the market could come all the way deep here, as long as it doesn't touch the starting point and it goes up, you still have a valid outside return of a bullish structure. Now we move on to the new structure high. So the new structure high of a bullish structure. So the rule for the new structure high of a bullish structure is any part of the candle of the new structure high must go beyond the initial structure high. So any part of the candle. So we're not talking about candle close. We're not talking about a wick. We're talking about even if it's just the wick of the candle that goes above the initial structure high, then you have a new structure high. So if you look at what we've got right now, this looks completely different to the picture the first image I drew earlier, which looks perfect. It looks symmetrical. So you can find this in a bullish market on the chart, and this is still going to be a perfect bullish structure because it's all about the rules. Sometimes this might come higher like that. You might find something like this in the chart. This is a bullish structure. You might find something that comes in a little bit short here. This is a bullish structure. As long as you get the 382 Fibonacci retracement, the market staying above the starting point, you have a bullish. This might be like a little bit like that here. You have a bullish structure. So they all come in shapes, different shapes and sizes. You just have to understand the rules. This is, I think, when I'm doing my structure course, I call it the imperfection rule. And even if it just weeks over the support. Yeah, but I don't know. Can you explain that even if it's just a week over the support, it is consolidating. But anyway, like I said, so this is I hope Milton you're still here with us. But in terms of every single understanding, this is the foundation. I'm just giving you a perfect foundation to, if you want to understand structure, because from this bullish structure a lot of things come about, and the very first strategy that comes from understanding this bullish structure is what we call the advanced pattern, because sometimes these pullbacks can get a little bit more complicated to the point where the market will come on to move back a little bit. It will come a little bit deeper before you get this move that goes higher. Now, for someone who is very, I mean, I trade advanced pattern a lot, and this is where you get your Gartley pattern. This is where you get your bat pattern. Yeah, from this move, it's basically just a bullish structure. A bullish structure with a complicated retracement, and then you get your advanced pattern. This is also how a lot of strategies, for example, wave analysis. In wave analysis, we have different corrective patterns in wave analysis, and that's where your stuff SP is. Oh yeah, exactly. It can't even touch it. It can't even touch it. Once it touches it, yeah, you can say it's a double bottom of the market with consolidation. Okay, you're right. I understand your question now. But that's where every single strategy comes from. Even this, sometimes it might go a little bit higher. Once you form your new structure high, once you form your bullish structure, sometimes you get retracement, because once you form a bullish structure, the market is basically telling you that this is going to be the new starting point. So the next outside return must not go beyond this. So that's how the market keeps building. The moment you get back-to-back bullish structure, then you're on the verge of forming a bullish market. But sometimes, if this comes back down and breaks the previous return, obviously you have no trade. You understand that that structure has been invalidated. But then when you understand trading, that when the market breaks a structure, the market doesn't just go, it retraces. And this is where we get the formation of a cipher pattern. This is why cipher pattern is the most successful, or the advanced pattern with the best winning ratio. Because 9 times out of 10, after the market breaks a structure of this bullish market, it will retrace. If you understand cipher pattern, this is where you make your money. So understanding structure is key to understanding a lot about trading. However, what I do in my day trading does not involve understanding structure, unfortunately. Any more questions? Are you still with us, Milton? Are you? Is that clear enough for you? Because this is a good kind of sort of introduction to structure, really. Nobody has any more questions? And also, guys, follow me on Instagram. I do post a lot of educational content, especially for those of you guys who like advanced pattern tips and educational content. It's clear, but I bet I came a little bit late. When and at what time are you live sessions? That's the thing, because I used to do live sessions every day, or Monday to Thursday. Really, that's usually when I do my live sessions. However, I mean, like I said, if you understand the way I trade, it's not every day that I have a trade setup. Because a lot of the things that, like I said, it's not every day that I have a trade setup. So because of that, I mean, over the last 2 weeks, even though I've streamed every day, I've only had like a couple of days where I actually took some trades in my live session. So because of that, and sometimes when I'm not taking trades, it just becomes, there's just nothing to kind of talk about. So I've changed to the point where I'm only gonna stream my live trades when there is a trading opportunity. But I always wake up at 7, because that's when I usually trade my runner strategy. And if there's a trade to take, then I'm gonna stream live. But usually I stream every Monday to Thursday, between 7 and 10 a.m. UK time. but yeah, I think people just don't. I mean, I keep saying this on most of my live sessions that trading, there's a lot of patience involved. If you're not someone who is patient enough to wait for your setup, then you shouldn't be trading. There's a lot of patience involved, and if I don't have a trade setup, I don't trade. It's as simple as that. And even though, like I said, I've got a few day trading strategies that I use, and the only one where I do take trades during the UK session is the runner strategy. And that one, definitely you're gonna see me stream at least a couple times during the week. But the other strategies involve me taking trades, right at the end of the day, or but yeah. So usually, like I said, usually between Monday to Thursday, 7 to 10 UK session. But listen, you can follow me if you need any help, any advice on trading. You can always reach me on my Instagram, or even through my website, through the email. You can always reach me there. Yeah, because the key is just not to try and make the usual mistakes that beginners make, and I told you, like, learning from the videos and what you're seeing on the internet, that is one of the mistakes that you're gonna make, because it's just gonna put you on a path where it's a really painful path that that you're gonna head down to if you continue going that way. But yeah, I'm always available if you wanna reach me. But I will try. I mean, hopefully the market is. I mean, the last couple of weeks the market haven't been volatile at all, and that's one of the reasons why I haven't been able to stream this week. This is the first day I'm streaming this week, because I had no trade yesterday. I had no trade the day before, and all of a sudden today I've got 2 trades. So So guys, any question? Wow, I didn't realize. I mean, if an hour has gone already. An hour has gone already. That's not expecting that. I think we had the UK inflation numbers come out this morning, and inflation went down. That's one of the reasons maybe the pound is showing a little bit of strength. And obviously, a few hours before that, we had the interest rate decision from New Zealand dollar, which obviously they increased their interest rate. So that should usually give strength to the New Zealand dollar, but usually that doesn't happen straight away. So that's the kind of reaction that we're getting here, where the market went really high, which is the best time frame to use. It depends. If you want to be a day trader, you have to stick to the 15-minute and 5-minute time frames if you want to be a day trader. If you're a swing trader, hourly, 4 hour, and then if you're a long-term trader, then you do. But if you're doing your analysis, depending on, I mean, most strategies, like I said, most strategies that you're watching through your videos that you're learning right now, you're gonna find on the internet. Those strategies, when you do your analysis, you always have to go. Always have to do top-down analysis. So you always have to start on the daily chart, bring it down to the 4-hour chart, to the hourly chart, and then that's where you kind of find your setup. That's why the video I was just saying you right now, you're gonna see how you do a top-down analysis to pick a trade. That's what the video is gonna show you if you watch it. But yeah, in terms of time frame, like I say, if you're going to be a day trader, you're going to be trading on a 15-minute or 5-minute time frame. And if you're a swing trader, then you have to go a little bit higher than that. I always trade on a 15-minute time frame, to be honest, always. So yeah, the consolidation is coming. The consolidation is happening. Come New York session, we're gonna get this deep pullback to happen. So questions, guy? Because if you guys are not active on the listen, because this trade is not gonna get to where I'm gonna be exiting until after New York session. So I will stream during New York session, which most normally I don't stream during New York session, but I'm likely gonna stream during New York session today, because this position is gonna stay open. Do you use support and resistance? No, I don't trade support and resistance. I don't use support and resistance because the support and resistance don't work. Or I can just tell you that my day trading strategy tells me exactly when I know a support and resistance is not going to work and when it's going to work. So I'm very, very selective. I don't use it to trade, but I probably do use it sometimes as a confirmation. But it all depends on my strategy. My strategy tells me exactly what I like. It tells me exactly when I need to rely on the support and resistance or not. No support, none of that, no indicators. The indicator I used to use before was the RSI, but you tend to realize that these indicators, they're nonsense, because sometimes the market can be oversold and it's still going down. So again, but yeah, I don't use no support, no resistance, and it's purely structure. A lot of things I do is just structure. Even Euro New Zealand dollar, I have a runner trade on that one. I think I missed the runner trade on the Euro New Zealand dollar. Less and less stuff I do growth for. Okay, that's fair enough. So are you what kind of are you a day trader? So you analyze on the 4-hour chart, draw your resistance and support line, and then you trade on a 15-minute time frame, and obviously you pick. I'm guessing that's what you do to kind of tell you where to enter and exit the trades, which is good. I'll try and incorporate what I just taught you guys earlier. Try and incorporate that to your trading, because that is going to help you a lot. Fair enough, and that's a good way to approach the market. Definitely a good way. Oh yeah, and to answer your question, so let me show you one instance where I think I had a trade on the, what currency pair did I? Was it pound New Zealand dollar? No, pound yen. I had a runner trade on the pound yen yesterday. That ended up being, well, kind of a break even. Really didn't really make profit in it. Kind of a break even. I shorted the market somewhere there, and I got out somewhere here. And obviously, if you look at this market, if you understand structure, we just have a lot of structure coming up at New York session. So so yeah, you could use support and resistance to trade, but you have to be very, 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 very careful in how you use it. But like I said, this trade, guys, is gonna take a while. I don't see the market doing anything until after New York session, because I can show you a similar setup that I had on the pound Aussie actually a couple of weeks ago. Similar trade that I took. I think I showed that trade on the live chat as well, on the live stream. Sorry, I streamed that trade on a live stream, and this is it. on the pound Australian dollar. Took this trade last week. As you can see, heading into the UK session, 7 a.m. the market did not do nothing. It just stayed there up until towards after New York session, 4:30, and then we get the reversal, and this is what I'm expecting to happen on the pound New Zealand dollar. But this is likely gonna happen as well, where the market is likely gonna consolidate before it gives you a reversal. So that's why I said I don't expect anything. I mean, it could happen, the market could reverse, of course it can do that, but I would expect until at least New York session before we get some kind of a movement. That's exactly what is happening, guys. This is exactly what you're gonna get here. Consolidation, New York session, and then we're gonna start to go down. I just want a deep pullback. If I get a deep pullback of around 200 pips, I'm out of the market, because usually the market tend to retrace at least half of the original move. We had a 450 pip movement here, so around about 200 pip. I mean, I don't think I'm gonna get 200 because I entered quite a little bit below. I think I entered this market about 65 pips below. But yeah, so if you're in a trade, just don't panic. Nothing is gonna happen. Nothing is gonna happen. You're just gonna get a consolidation, because the market is at the ceiling right now. You get a consolidation, and come after New York session, that's when you're gonna get the move. Any questions, guys? Because I'm likely going to end this stream at 9:30, just before the UK session officially opens, and obviously I will come and stream the New York session to show you guys the progress of this trade. But you guys can keep an eye on it. Like I said, the market is just going to consolidate here before we get a reversal. So yeah, hopefully you guys are gonna come for the New York session as well. Thanks, Brandon. Appreciate that. What you're saying tonight? Where do you live? You don't live in the UK, I'm guessing. Because the US session for me is gonna be, the US session will be at around 2:30 UK time, because I live in London. So so yeah, you don't have any questions, guys. Okay. Yeah, I'll wait a few more minutes, and then I'll end the stream, and Okay guys, well, I'll see you during the New York session. And yeah. Yeah, hello?